Thank you so much for taking out the time to talk to ET Now Digital. The budget announcement has just been concluded. What were the key takeaways in your view?
So I think a key takeaway in general is that finance minister has given a stability to the direct tax. Every year there used to be changes in the direct tax and people used to speculate. I think our country needs a long-term tax regime, and this time by no changing, government has given an indication that we are going to remain a stable tax regime. As regards the NBFC sector, I think there are a few good things in the budget. Number one, that the surface limit have been reduced from 50 lakhs to 20 lakhs. This will enable NBFCs to recover the debt, the bad loans in a time-bound manner by enforcing the security through surface, and that will reduce the credit cost and reduce the litigation cost. So that is going to help the NBFCs. Besides, in housing loan, the tax incentive have been extended by another 1 year. So I think that is going to be continued, and that will help the home buyers to avail the loan and get the tax benefit. And setting up the asset management company and asset reconstruction company to address the NPA, I think is the need of the hour. I believe that given the constraint in the current situation, by doing managing and giving to all the sector, be it textile, be it infrastructure, be it lending, be it banks. So I think it is a very balanced budget, and I think it is very good for everyone.
All right. Thank you so much for that elaborate response, sir. Were there any shortfalls in your opinion, or anything perhaps that you sought more clarity on?
So I think disinvestment, we were hoping that announcement on the, while it is RBI subject, but we are hoping some guidelines, some clarity on the corporate holding, the announcement, but maybe it is only draft paper have been issued by RBI. So we are hoping that some clarity on this may be part of the budget. But in any case, that can be done separately also. Barring that, everybody was afraid that there could be some COVID cess, but government has managed that well within this budget, and I think that is a big positive.
Right. So, recently there was also talk of more stringent rules coming in for the larger NBFCs. Do you welcome such a move by the regulator?
So I think Reserve Bank intent is to push the larger NBFC to convert into a bank, or else be regulated similar to the bank. So they are making the tighter regime. This might be reason because of the ILFS and DHFL fallout, where a lot of loss has happened to investors and the lenders. So this might have triggered. So tighter regulation will be good. Only thing is it might increase the cost of operations for the mid-sized companies. But I think it is required to ensure that they are measured and regulated towards similar to the banks. And I think this will also push RBI to also be more opened up and flexible to grant the licenses, be it commercial bank, be it a small finance bank, based on their eligibility and criteria, which is fit and proper.
Right. So final question from me today. Fiscal deficit was a concern going into this budget. A lot of people were worried about enhanced borrowings, and that's why they felt that, an expansionary fiscal policy might not be the best thing, and that there was a likely to be an increase in taxes, because while GST and tax collection has improved drastically in the last 4 to 5 months, it still has a long way to go. So do you think this budget is now signaling for a change in the stance of the government, or perhaps a more proactive approach towards markets and economic rebound in general?
I think so. Age compared to all previous budget, there's a clear-cut change in this side this year, and I think government is signaling the long-term reform. So this change is also in one way some sort of reform where they are signaling, yes, we are going to bring the policies which are long-term, which are going to be beneficial in the economy in the long term, rather than adopting a short-term approach and addressing something which is immediate, but in contrast to the long term. So I think this is a good change, whether be direct tax, be is addressing the fiscal deficit. I think this is a good measure.
All right, Mr. Sharma. Well, thank you so much for talking to us today, and we look forward to having you back on the channel sometime very soon.
Thank you.